Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market is holding on to the green, but not that 26,000 mark. That has been elusive all throughout the week. So far, we've gone as close as less than 10 points from that 26,000 mark, but we have failed to conquer that time and again. Having said that, today there are pockets which are doing quite okay, especially if you look at the broader markets. Metals as a space is also shining quite bright. So Nalco and an MDC, a Tata Steel and a lot of other names are actually holding on to gains of around 3 to 5-6%. PSEs have also managed to bounce back. So apart from the banking names, there's HPCL, ONGC, some of these energy names in focus, and then Power Grid too is doing quite okay. In fact, power as a space is doing quite all right. That Motilal Oswal initiation is also supporting the sentiment. On the losing side, however, you have Policy Bazaar coming under pressure. KPIT Tech is the other one that we are watching out for. And then SBI Life, that's the other stock which is down in the trading session. So you have to say, Aisha, that 26,000 is not happening in a hurry. And even if you look at the internals, nothing to really get excited about at the moment.
Oh yeah, absolutely. There are of course those individual, stock-specific movers, and it's clearly an ET Now impact. We were the first ones to tell you that our sources are telling us that the government may be moving ahead with the market coupling of power changes, and look at the kind of damage that it's done to IEX. That stock will just come up for you on your screens. It's seen the biggest decline in about 3 months. The trading was almost about 7 times the 20-day average, and the trading in call options for this stock has been again the 5x of its average. IEX now sliding down almost 11% as we speak. We'll of course get you more details on that story in just a bit as to why the kind of damage that you're seeing on IEX and what is it that we've heard from our sources henceforth. But other than that, there's of course First Source Solutions. They've acquired a company for about $42 million. So that's another new specific mover. Metals, clearly, that's the trade of the day, right? Nalco, NMDC, SAIL, Tata Steel, the entire pack is very robust. China's central bank has announced a sweep of support for the economy, and that typically, along with, of course, a weak dollar, tends to impact the metals trade. And today, all those stocks are holding up quite smartly in trade. Other than that, of course, while metal is the most, defined trend right now in the market, ONGC has made a comeback, about 2% higher for that stock. M&M continues its uptick, another 1.5% after an excellent last Thursday and Friday on that stock. Bharti continues its pole position. And then, of course, some of the technology names beaten down from Friday, but they are beginning to look up a little bit. But let's welcome on board our experts and figure out what they're spotting in the markets right now and what is it that both the trader as well as the investors should be doing. Gurmeet Chadda on the fundamentals, Kunal Bothra, Naresh Mirani on the technicals. Kunal, afternoon. Seems like almost there for 26K. But what about the leadership? Because today you're not seeing banks or any other sector, but actually metals power ahead.
Yeah, I think so. Today it's a bit of a change in terms of the sector approach. But when we look at this, even the Bank Nifty after this kind of a mild profit booking or so has managed to respect that previous day low. So over the last 7 or 8 days consecutively, we've seen that the Bank Nifty has made a higher low for itself. So I think yesterday's low, for example, was closer to 53,600, 700 for the Bank Nifty, and we've not tested that 53,800 odd mark for the Bank Nifty today. So that itself is an indication that maybe there could be a couple of days of pause for the banking index. And if you manage to just about adhere to the previous support levels, then we could build on to the rally. Today, what we are seeing is that the markets, even after the Bank Nifty not performing, has not letting off, has not gone into a zone where the risk appetite has gone down, because now you're seeing other sectors like the PSUs, metals, these high beta sectors, they are managing to make a strong comeback for themselves. So that risk appetite or risk on mode is still on, and maybe a couple of days of consolidation for the Bank Nifty. But I believe eventually we should see many of these private sector banking names heading up significantly higher than where they are today.
Okay, that's a take coming in on the markets right now. Naresh, what's your sense on the market and this rally in metals? Do you expect it to extend?
We could see an extension in the rally in metals, specifically more on the aluminium side, because we've seen a decent recovery in aluminium prices also, as well as alumina prices. And if you look at Hindalco, it has made a new all-time high. You have Vedanta, which continues to be at an all-time high if it adjusted for dividends. And Nalco also today has sparked up. So looks like this side of the metal pack looks more interesting than the steel names. So I would continue to like Hindalco, Vedanta and Nalco.
Right. Let's welcome on board Gurmeet Chadha as well and find out what he's making of the markets right now. Gurmeet, not purely commodities, but commodity stocks definitely, and in particular metals after, China talking about a slew of measures and a fair amount of rate cuts as well coming in the remainder part of the year too. That sort of instilled a sentimental move on metals. But would you look at it from an investment point of view?
We've got to be more tactical when it comes to metals and commodities, Aisha. I think, as you pointed out, any stimulus from China, whether they have announced a host of measures, clearly tells you that now I think they have to resort to more stimulus to revive the economy. And also traditionally, if you see, a weak dollar when the rate cuts, I'm not saying weak in like absolute sense, but a relatively weaker dollar is always positive for commodities. So I think a multi asset approach is advisable at this point of time. Valuations are stretched in a lot of pockets. BSE's and NSE small cap, for example, trades at 35 times earnings. If you see almost 50% of the stocks are seeing EPS downgrades. So, valuations are stressed. And at this point of time, if you can, diversify towards precious metals, which is gold, silver is both probably precious and industrial, and some maybe ferrous and non-ferrous, as well as bonds. If you see, we are beginning, we have Bank of Switzerland this week, which is likely to cut rates. China's announced a host of measures. RBI also will follow through. Possibly they'll start first with CRR cut more rather than the rate cut, considering how deposits have been a bit of a struggle for banks. So rate cuts, stimulus from China, relatively weaker, dollar is always positive for commodities and also bonds. I think bonds, if you see, my sense is you will see a softening of 50 to 100 basis points. I've been making these points for the last 6 months. And a lot of us, while we track equity returns, the bond returns are also in double digit in last 10 years. So I think it's important to preserve what we have made last 2 3 years. I think the returns have been very, very good. So maybe a little more prudent and balanced approach will ensure that we preserve these returns.
That's the latest strategy that you should be following in the markets. Hi Gurmeet, Anisha also joining in the conversation. What's the sense on the likes of Paytm, Nykaa, PB Fintech?
So we've been, constructive on PB Fintech. Maybe there's a bit of a professional bias because I come from financial services, a very asset-light model. If you see now an online sourcing of insurance, 90% plus are now being sourced from, the Policy Bazaar platform. In fact, HDFC and ICICI earlier were not part of the platform, and such is the power of the platform that they also have signed up. Paisa Bazaar has been leaking less. I think so it's been leaking money a little bit, but now I think that's stabilized. So in terms of online, in terms of client lending, almost 20-25% leads are now coming from there. And in insurance, when you're a distributor, the commissions are upfronted. So when you are an insurance manufacturer or an insurance provider, the gestation period is long. You become break even over a 5 7 year period. As a distributor of insurance, you tend to upfront in some of the policies like endowment and assured payback, the payouts are in excess of 50%. So I think it's a great marketplace. Valuations were a little stretched. So you will see periodic profit booking. So that's something which is there in the portfolio. I've been discussing Zomato with you for a long time now. It's done pretty well. My sense is quick commerce has a lot of long legs. We have, I think, all put together. Look at Zepto, Blinkit, and even Swiggy, Instamart put together. Quarterly run rate of quick commerce is just about 2,500 crores. I think this figure could be 4, 5, 6x on a quarterly run rate. And here you're not really deep discounting. You're actually charging a convenience fee for quick delivery. So you're basically integrating with the local ecosystem, which is your mom and pop stores and kirana stores, which politically also makes sense. So for us it is Zomato and PB Fintech as far as the new age businesses are concerned.
Okay, that's that on the new age businesses, but let's tell you what's the disappointment today, and that's surely been IEX. And here's why. Sources are telling our channel that the government is moving ahead with the market coupling of power exchanges and has asked the Grid Controller of India to complete the pilot study on time. In fact, let me take it back to my colleague Prakash Priyadarshi, who broke this story earlier in the morning.
Yes, we are learning from our sources that the government is moving ahead with the market coupling proposal. Our sources in the Power Ministry are confirming that the government is committed to implementing market coupling of power exchanges. In fact, Power Ministry has instructed Grid Controller of India to complete pilot study on time. Grid Controller of India is conducting a pilot study under direction of CERC, and therefore now instructions have been given to the Grid Controller of India to complete the pilot study on time. We're given to understand that Grid Controller of India is expected to submit its report within a month, and then CRC will take a final call on the date of the implementation. A very significant development coming in. Sources are also informing that the Power Ministry is planning to implement a new mechanism either by end of the current financial year or at the start of the financial year 2026. A very significant development coming in, as the market coupling will ensure uniform power price across power exchanges and help government to increase overall electricity trade on power exchanges.
Well, yes, an important story, and the impact is visible on the screen with IEX stock being down 11%. But Gurmeet, do you track this one, IEX? Any view?
So actually, we had some exposure. We exited this last year for the same reason, too much of a regulatory overhang. While in between few quarters, volumes showed a bit of a surge. So they operate in different segments, and it was showing some traction. But there are more better opportunities on the power value chain. Look at the power generation demand is now likely to breach all-time high during Diwali. It reached an all-time high figure during peak summers. So the generation itself will grow at about 12%. I think NTPC is still very favorably priced, still at about 18 times, 4-5% dividend yield. And you have an NTPC Green IPO now, which could lead to some value unlocking. And they have huge capacities coming up on the thermal side. Clear market leader both for generation as well as installed capacity. Other than the green energy, we've seen Tata Power doing pretty well. In terms of both the thermal portfolio as well as on solar panels. Then you have other, the grid makers like Power Grid, the cable and wires, the transformers, insulators. I think there is a very secular demand on the entire power value chain, and you would prefer where there is less of regulatory overhang and more valuation comfort. So we are invested in Tata Power, NTPC, Power Grid, and some of the cable and wire makers.
Okay, another news, and in the latest crackdown by SEBI on the SME IPO market, news agencies are reporting that the regulator is probing select bankers to IPOs of small businesses. In fact, Sharad from my research desk is here to give us more details on the same. Sharad?
Well, from agencies, what we are gathering is that SEBI action is coming in for the SME IPO investment bankers. As per the agency's report, roughly 6 investment banks are actually under the question. However, the names have not been disclosed yet. SEBI is worried about the malpractices which are happening in the SME IPO space, and that's a cause of concern which we had already raised at ET Now as well. At least half a dozen of them have come in, especially on the fees part. It's expected that they have charged roughly 15% of the IPO size, the raising fund, and the market trend that suggests roughly between 1 to 3%, which is much higher and prevalent in India. Also, the higher fees might be charges to shore up high subscription numbers also, and the bids, they might not be genuine and might have been cancelled before the allotment as well. Now, SEBI is looking to curb this nexus when it comes to the investment bankers and the investors and the HNIs who might be operating these issues. Also, the SMEs, if you look at it, they have raised almost 6,000 crores in FY24 as compared to just 2,200 crore rupees in FY23. Also, there has been a lot of commentary coming in from market folks, especially SEBI's whole-time director, Ashwini Bhatia. He had also spoken about all the people like merchant bankers, chartered accountants to advise on a right basis for the SMEs when they come for their listing. And also Ashish Kumar, MD and CEO of NSE, they have stated that the stricter guidelines would be appointed. Of course, in the SME space also, there are certain stocks which would be in focus. A lot of trouble brewing in the SME IPO space. Recently, Trafsol IT Tech, the BSE had deferred the listing of this SME company. And of course, this was the first company after the subscription. There has been a deferment. It was subscribed almost 345 times. Also, the merchant banker for this was Ekadrish Capital. Also, Archit Nuwood would be in focus. The IPO was delayed due to the queries raised by the exchanges, especially on the company's profitability going against its peers. Its merchant banker was Share India Securities. And over here, look at their issues in 2024. The names include VVIP Info, GEM Environ, AVP Info, as well as Pune East stock. Also recently, Resource Automobile, a 12 crore IPO which had come in, huge subscription of almost 400 times. Now the stock is trending almost 40% down at 72 rupees against its IPO price of 118 rupees. And a lot of instances are also there, especially like Verinium Cloud and Ad Shopee Retail, which have been removed from the SME platform. So this is a very kind of a shock coming in when it comes to the SME IPO ecosystem, but the cleanup is happening. That's what we are taking our stance at ET Now.
Sharad, thanks so much for that. Time now for a quick break and we'll be right back. Don't go anywhere.
Back with closing trades, still counting down to that 26K mark for the Nifty, but we're doing okay. Metals, of course, is your key trade today. Other than that, there's a TechM, HCL Technologies, there's M&M, there's Wipro, Tata Motors, Infosys. They're all also perking up. Gurmeet, before we move forward, just wanted to get your sense in on IT, because a lot of question marks were raised post the Fed rate cut. You did have a down day also for IT on Friday. What next then?
My sense is you got to be more selective. Recently, I was reading a report that data is moving back to premises. More than 40% exit is happening from cloud. So, this is a space where disruption is the new normal. And my sense is we need to probably track US economy better and see if the financial system there and overall deals from there are showing any signs. My sense is US looks like a little soft right now. So we got to be more selective. We are more focused on where we are getting good dips like KPIT, which is more on automotive software. You also look at some of the new age names like Zomato. You look at some of the large cap names if you get some dips, like some HCL Tech or Tech Mahindra. But there's very little valuation comfort, right? If you buy IT services at 30, 40, 50 times, the near term returns would be disappointing. So we are right now neutral and more constructive on financials. I think it is at a new life high. So congratulations to everyone.
Yes, a fresh record high and 26,000 finally indeed. All throughout the trading session, we were going close to that mark, less than 10 points away, but it wasn't happening in a hurry. But finally, we've managed to conquer that mark of 26,000. Though I think we've come off from there the moment I think we hit that. Are we building on to gains? Are we sticking with that? That's the big question, because earlier we were talking about 26,000 by Diwali, by end of the year. But at the rate at which we are going right now, who's to say perhaps we could end the year with a much higher number as far as the markets are concerned. In fact, in terms of the big contributors right now, let's pull up the names which are actually doing quite well in the trading session, especially from the frontline index. It's Tata Steel, Hindalco, Power Grid, Tech Mahindra, ONGC. These are your top gainers. While on the losing side, it's HUL which is sulking, SBI Life, Grasim, Ultratech Cement, etc. But Naresh, quickly coming to you, this market setup, 26,000 on the cards now. Where do we go from here on? What's the next level to watch out for on the Nifty now?
So the momentum has been strong. We've got into a lot all-time high. In this case, trying to take a level better is to keep shifting your trading stop losses. That comes down to 25,500. And given that the last highs, from the last highs, we could go towards 26,500 also possibly. But overall, the bias is positive. Until the time banks continue to support, the upside is open, because banks have not done well over the last 3 years. So we don't know how much of a momentum it can continue in.
That's the thing, right, Kunal? Because it's a touch and go with 26K, while optically, in any case, we're there. And today, it's not your key banking, IT kind of sector supporting it. It's largely metals. So are you convinced with this 26K? Because in the morning, you were talking about as to how you do see 26K happen and we even build on to the gains.
Yeah, that's the good part about the markets today, that even with Bank Nifty being negative, we've managed to cross that 26,000 mark because we have support from other sectors. And when a sector churn plays up in a very classical way, where each sectors, they tend to have a phase where those sectors, they tend to participate, and then once the rally extends or gets into an overbought, these sectors or these stocks get back into a consolidation and the move shifts to the other underperforming names or the ones which were consolidating in the previous leg. So I think that's a classical bait and kind of a rally for the within sectors, and that keeps the market a lot more healthy. Now look at it this way, from 24,000 to 25,000 mark, I think we took around 22, 23 trading sessions odd, and from 24 to 25K, it's almost been 40 to 45 sessions for the index. So that itself tells you that the last 1,000 points, even if looks like that the move has been more steep, but it's taken a lot of time for the index to move from this 25 to 26k mark, and with this kind of a sector churn move, it looks like that should be sustainable.
Yeah, I think almost 37 sessions is what we took to kind of hit that mark as far as the all-time high in 26,000 is concerned. The last 1,000 points being gained in the 37 sessions. 34 stocks out of Nifty 50 have given a positive return if you look at that time period. Some of the top gainers that have contributed to this last leg of the rally include Bajaj Auto, Shriram Finance, Bajaj Finserv, Bharti Airtel. So these were the pallbearers which actually took the Nifty higher. Not your usual banking names or HDFCs, ICICI of the world. They will perhaps be participating in the next 1,000, but for now it's belonged to Bajaj Auto. You had Shriram Finance, Bajaj Finserv, Bharti Airtel, even Hero MotoCorp and Bajaj Finance participating, but not other heavyweights, not the financials, at least as far as this number is concerned, with the Nifty hitting that all-time high. But that's the next question that I have for you, Gurmeet. Do you think the next leg of the rally will actually come from financials and the private banking names at that?
I think very high probability. You will see a lot of treasury gains with decent yield now. As if you see from last quarter, it's down like 30 basis points, which translates to about 2 or 3% absolute gains on what you're holding. It will lead to some stability in NIMs. NIMs have been under pressure as rates are going up. It's a little more positive for NBFCs because they are more dependent on wholesale sources in terms of cost of funds. And that is why you've seen a bit of a leg up in some of the NBFC names you just took. I think some of them are still subdued. There's one name we really like is in the space, Ugro, which does only MSME lending. They have their proprietary machine learning model, which is something very similar to what Civil is for individuals. They developed something very similar for MSME. They did a fundraise of 1,200 crores, but that hasn't really led to any change in market cap. Trades below book almost. And then there are even better names like Poonawalla and Bajaj and some of the other names. So I think NBFC should be in focus. Gold NBFCs could come back. And of course, PSU banks. I think there's a lot of value comfort there. A lot of them are at book or below book. And I think they haven't really participated as much. So once, you have better quarterly earnings, more stabilization in terms of credit deposit ratios, I think banks will probably, the PSU banks and some of the tier 1 banks may join the party soon.
Gurmeet, great to have you on the show. Thanks as always for taking the time out and joining us. And what a moment it's been. 26k here on the Nifty. Still got half an hour of trade to go. So let's see whether we sustain onto these gains or not. For now, of course, it's just been a touch and go moment with that level. But Kunal, what about your closing ideas?
So I'll go with the metal pack, and Hindalco looks to be a stock which is coming back into a breakout mode. So, there was JSPL as well as JSW Steel which are leading the charge from the front. But I think Hindalco is also trying to play a very strong catch-up. So that's a buy.
Right. Naresh, what about your closing trades?
So that would be Hindalco. A very strong chart here, making new all-time highs. 3-4 attempts done around that 720 mark. So looks interesting for the short term.
Let's get you another piece of interesting news. And according to our sources, we understand that SEBI, the board is going to be meeting on September 30th. While the final agenda of the meeting is not finalized yet, the board may be discussing issues related to charges against Chairperson Madhavi Puri Buch. Ankur Mishra, my colleague, is here with more details on what he's picking up from his sources. Ankur?
Yes, sources say that SEBI board meeting is set to happen next week on September 30, and it will be first time that board will be meeting after there were serious allegations which was leveled by Hindenburg Research against SEBI chairperson Madhavi Puri Buch herself. Now it will be interesting to see whether or not the board take cognizance of all these allegations and if there is a discussion in the board meeting. But what we do understand through sources is that there is likelihood of approval of mutual fund light regulations. Remember, there was a consultation paper which was already floated by SEBI regarding light regulations for passive mutual funds, and also we understand that a new asset class for mutual funds is likely to be approved in the next board meeting, and this was for the category of high risk taking investors, whereby the SEBI wanted them to deter going to any of the unregistered portfolio managers and creating a new asset class for these investors. But most importantly, we understand that there might be discussion on approval of new norms on future and options. Remember, there has been a long discussion on these norms with the stakeholders. The stakeholders have already submitted their comments, and the proposal was that there is going to be an increase in the margin of future and options traders. So all these options, all these suggestions will be considered by the board, and we understand that there might be approval of F&O norms which may happen in the next board meeting, but all will depend after the final agenda which is circulated by the SEBI, as it is yet to be finalized what all items in the will be discussed in the board meeting. But for sure, this is the first time board is meeting after the serious allegations of Hindenburg Research.
Yes, that first board meeting, so definitely will be important, but we'll wait by for the agenda to get more details. Time for a quick break. Don't go anywhere. Last 30 minutes of the trading session on the other side. Welcome back. Well, for the markets right now, we have given up the gains and a very sharp downtick actually coming in the last few minutes itself. So after hitting that 26,000 mark, a bout of profit booking is what is underway right now. In terms of the drags, it's HUL, which is down a solid 2.5–3%. ICICI Bank is coming under pressure. There is also some pressure emanating from Reliance Industries because that stock is in the red. Kotak Bank, SBI Life, these are the other big drags in the market right now, but definitely off the highest point of the trading session. Let's take a look at the Bank Nifty as well and figure out what are the constituents of that one which are actually dragging the index lower, because in the last few minutes itself there has been a bit of a crash which has come in. So PNB, Bandhan Bank, Kotak Bank, IndusInd Bank, Axis Bank, they're all down in the trading session. In fact, we should try pull up some candlestick charts to figure out where exactly is the pressure coming from, which are the stocks which are causing it. But let me first toss it across to Naresh to get more details on this one. Naresh, what do you make of this sudden bout of profit booking? Is it just that profit booking, or there were some technical levels that the street was watching out for, some reversal which has happened?
So we tend to see nervousness at big round figures, whether it is at 25,000 or 26,000. So it looks like a little bit of a jitter coming in. And it's just a 70-point dip on the Nifty and say maybe a 150, 200 points on the Bank Nifty. We've had a very tepid day in terms of the size of the move. For a 54,000 index, we've just had a 200, 250 pointer range for the day on Bank Nifty. So overall, just a bout of nervousness around the 26,000.
Yeah, fair amount of nervousness. Rajat, hi, afternoon. Welcome to ET Now. Wanted to get a sense of what you're making of the market right now, given the global construct, not just the Fed rate cut, but the measures from China as well earlier this morning. And now our stint with 26K and then straight away an 80-point fall from there.
Yeah, good afternoon, Aisha. No, I mean, come on, like the way markets have gone up, 80, 100 points move is just a blip, really. I think, these days when I talk to clients and when I invest money, I tell them upfront that, 10 to 15% correction from here should not bother you. And if it does, then wait before you get into the markets, because, the last 3 or 4 months, I think since April, the markets have run up quite aggressively. I think we were trading at a multiple of around 22 that time. Now we're trading at a trailing multiple of 24. And this is after, 4 years back, we changed how we calculate the price earnings from standalone to consolidated. If you look at it that way and you had to compare a historic number for the price earnings multiple, then this should be 25% higher. So it should be something like 28 trailing multiple. So we are very expensive. The markets are very, very expensive. But on the other side, if I look at what clients are doing, what fund houses are doing, there is so much cash with the mutual fund houses, 5 to 6% cash everyone's holding across all the dynamic funds and balanced advantage funds and a lot of these asset allocation funds. Everyone's reduced their equity holding by 20%. They're holding debt and arbitrage and cash. So with so much money waiting to get invested, I doubt if there could be a sharp correction anytime soon. Yes, maybe if there is a black swan event in future, markets will fall. But right now, there is enough cushion to absorb any fall. So I am looking to invest into one, large cap stocks which are available at reasonable valuations. I can talk about the ones that I'm investing with a disclaimer that I've already invested and recommended these stocks. And two, I'm trying to come out of a lot of the mid cap stocks, because that's where, and that's irrespective of the sector. Be it, pharma is one of the sectors I really like, but mid cap pharma is somehow really expensive. I think, again, mutual funds buying into mid cap theme and mid cap stories, that's where most money is flowing into. So that's where, irrespective of the sector, irrespective of the segment of the market, that's where a lot of fraud is. So stick to large caps, stick to stocks where you still see value. Be prepared to take a 10-15% dip, because even if it happens, it's going to bounce back really sharply. That's my sense.
Get a color on where is it that you're finding value, Rajat? You just talked about as to how you are investing in large caps with the cash that you're sitting on.
Yeah, so just like a lot of fund houses, we also get incremental cash coming in, which we have to invest. And I really like consumption as a theme, but then the moment you say consumption, it sort of covers everything. Banking could be consumption, telecom could be consumption. I am talking about consumption, mostly FMCG, fast moving consumer goods, things which are available 100, 200, 300, where, which are even available in rural economy. There's a lot of NFOs lined up on the rural theme in the next 2 months as well. So, stocks which I've already recommended on your show about 3-4 months back, Hindustan Unilever, and actually, interestingly, a lot of the stocks which are not doing well in trade today. So Hindustan Unilever, I find that available at a fairly decent valuation. ITC is a stock that I really like, and Britannia, Dabur, a lot of these FMCG names, that's where I see a lot of value. And the other thing is, now I remember about 4-5 years ago, I've had these interviews with you where I said, I find private banking to be really expensive. Banking is anyways not something I like. But right now where these banks are available, they make a very compelling case to buy, particularly Axis Bank and HDFC Bank. And the reason why I'm not counting ICICI Bank is because of the merger of ICICI Securities with ICICI Bank. There was a lot of buying in that stock. So that's sort of trading a little expensive. But you see HDFC Bank, it used to trade at a price to earnings multiple of 28 around 5-6 years back. Today it's trading at a multiple of 18. I do get what the problem is, that there's a skewed advanced deposit ratio, and not many people are putting money in the banks. That's because a lot of money was going into mutual funds and a lot of these other instruments that came about. But now with the government doing away with the tax benefit for debt funds, which was primarily sold as an alternative to bank FDs, I think a lot of that money will start flowing back into the banking system. And it could take a while. It could take a few quarters. Maybe when the market cools off, more money will flow into the banks. But right now where they're available, HDFC, as I was saying, used to trade at a multiple of 28. Today it's available at a price to earnings of 18. It's almost like, about 40-45% cheaper. Same with Axis Bank. And those are two banks which we've recommended. So largely sticking to large cap space, private banking is what I like, and consumption, as I said, to be specific, FMCG is what I like. That's where we've made some buying. And I've come out of a lot of stocks. I should mention this. I've recommended some of these on your show. Gulf Oil, Manorama Industries. I like all these businesses. There's nothing wrong, but they have gone up 4x, 5x. So we've sold some stocks there.
Interesting. And what within FMCG? Is it largely tilted towards the ones with a larger rural exposure, Rajat?
No, exactly the stocks that I mentioned. ITC, Hindustan Unilever, Nestle. The other stock that I bought is in paints, Asian Paints. Now, I remember Asian Paints used to trade at a multiple of about 100, which is when everybody wanted to buy it a few years back. Today also, it's expensive. It's trading at a multiple of about 60. But right now, I don't find it as expensive as it used to be. Although I will say, whoever is buying in these sectors or any sectors should actually stagger their investments, specifically where we are right now. We're towards the end of September, and where the markets are right now, I've seen the results get factored into stock prices before the results. The same thing happened at the end of the June quarter, and now we're in September. 2 weeks from now, we'll start getting earnings of the second quarter. And as I said, multiples have moved up higher, so maybe the markets are expecting a very, very good quarter as far as corporate earnings are concerned. So stagger your investments. Invest over the next 3 months. Make a rule to invest 10% of what you have to invest every week. Maybe that'll work.
Naresh, let me pick up on a few of those stocks. ITC, HDFC Bank, Kotak Bank. Is that where you're seeing strength for the next few months?
So the strength is clearly there. It's just that the momentum has been slow in the FMCG names. ITC is very close to a new all-time high. But it's been a very slow move around that 500, 520 mark, but the trend is still up. HDFC Bank is interesting because this is like maybe the 8th or the 10th attempt around that 1750 to 1800 mark over the last 3 years. Could take a pause here, but eventually the structure is after so many attempts, it should break out. And if that happens, we could be going slowly and steadily towards the 2000, 2100 mark also over there. And now 1600, 1650 becomes a strong base for HDFC Bank. So a lot of these heavyweights have very strong structural charts. Momentum could be slower, but the trend is still very up.
That's the take coming in some of these interesting names. We'll also check in on some of the buzzers from today. While, by the way, the market has completely come off and it's, given up all of its gains after hitting that 26K mark. In fact, right now we're lying absolutely flat on the Nifty. So fizzled out immediately after hitting that level as we speak right now. A couple of names though in focus. Tata Power, for instance, Motilal Oswal this morning initiated a buy with the target price of 530. They're talking about as to how the company is undergoing a multi-year structural shift in their business and how the management aims to double the profits by FY27. And that's where they do see quite a fair bit of value. That's of course Tata Powers. There's GMR Power as well. They have clearly a focus on deleveraging and a shift to an asset-light model. That's something that the brokerages have been liking it. Power Grid as well, a successful bidder for establishing an interstate transmission system in Gujarat. So that's the other stock which has been holding out very well. Rajat, the other pocket that I wanted to talk about is the energy and energy transition theme. Where is it that you are finding value, if at all you have exposure to this particular segment?
Yeah, this is a very interesting segment and I think it will do well going forward. But when it comes to value, I bet no one can find any stock with any value, whether it's, renewable, solar or thermal or the old names. Look at some of these stocks, Tata Power you were talking about. It used to be 28 rupees some 4 years back. It's today trading at 430, 40. Same happened with a lot of the PSU companies which were getting into hydro and solar and SJVN and NHPC. I've had this in my portfolio since it was 24, 25, and I had it only because they used to pay about 2 rupees dividend, which is around 10% dividend yield. Look at the way they've moved up, like 100, 120 plus. I think it happens in the market from time to time that, there are certain sectors and themes which become flavor of the month and somehow everybody starts buying this. Fundamentally, I don't think anything has changed so much for power companies. I, in fact, at one point, tried to look at what's going for the power sector because of which these stocks are running up so much. And today also the problem remains, whatever problems they had back in the day. So I really don't know. The only thing I kept reading about was, everything would become EV, electric vehicles. So that's actually, dumb to my mind. So look at the valuations, the way they've moved up for this sector. I can almost bet that a lot of these stocks will trade 30, 40, maybe 50% lower to where they are. It's just a matter of time when, some correction happens in the market. Extremely overheated sector, I would actually stay away from this. I like power sector. I like energy and power in an emerging economy like India should do very well. Keep an eye on these. You should buy these. You should have these in your portfolio, but not right now.
the portfolio, but maybe not the best time to just do that. In the meantime, just taking stock of some of the buzzers, Ajanta Pharma has moved up, Deepak Fertilizers, Thermax, Vedant Fashions, Polycab. In the last few minutes, there has been traction in some of these names, and they will come up for you on the screen as well. So some of these stocks just perking up in the last few minutes. What's giving up is Triveni Engineering in a big way. If I have it right on my screen, that stock has come off very materially. Granules India too has come off sharply as well, and then of course Concord Biotech has been on the back foot for a while now. Naresh, just wanted a sense from you on Honasa as well as Nykaa. Both of those stocks are under pressure. Anything on the charts that looks like a buying opportunity or looks like a spot where you should book the profits if you have any?
So Honasa saw a big block happen, and it's been facing a lot of resistance around that 520, 540 mark, and would avoid the stock given that the stock has seen a lot of volumes and bulk deals have also happened, but the stock has not broken out, so would avoid. Nykaa, similarly, most of the new age companies have really turned around after giving breakouts. Nykaa has been facing resistance again. It tried to cross about 200, went to 230, but we are back to 200 odd levels, so would avoid here again. The other names in the new age packet still look better.
Kunal, what's the view on a couple of these telecom companies? Because we're just getting news which suggests that the telecom minister, telecom companies and some of the officials are likely to meet today. We don't know the agenda, but one would imagine that AGR is something that might be discussed as well with these officials and the companies. But I mean, there are just 2 or 3 players in the listed space. So what's your take on, let's say, Airtel, Indus Towers, Bharti Hexacom, Bharti Airtel?
So yeah, Bharti Airtel is something which looks attractive. Indus Star also, I think on the more longish term basis, I think looks attractive. The stock which provided a breakout at the 225 plus mark, then moved to I think 450 plus mark very recently, and then from there I think on the back of this recent news flow, the stock had corrected 10% approximately. So yes, I think on a longer term basis, Indus Star is also the one which looks attractive. Now the stock, Vodafone Idea, I think largely that's a stock which I would continue to believe that it's still into a downtrend. We mentioned this a couple of weeks back when the stock had broken below its 200-day moving average. That now there could be a chance that the stock may get back into a downward move on the accelerating side. Now when the news flow started off to be negative for the stock, we saw the pace of correction steepen quite significantly. And even if the bounce back happened for Vodafone Idea in the last couple of days, there was this up move towards I think till 11.25 odd mark for the stock, but that lasted for just about a couple of trading sessions, and then you see the stock coming back into selling pressure, which means that it should take a lot of time for the stock now to form a bottom. The indicators are oversold. Maybe they may not be an immediate correction into the stock price, but more of a time-wise consolidation. But eventually a drag is what I would expect from Vodafone Idea. Bharti Airtel so far looks to be the strongest from the pack.
Yeah, that's pretty much evident on the way the stocks have been moving. Today, of course, you're seeing profit taking, but Bharti has been practically at an all-time high. Rajat, let's get your thoughts in on telecom.
Yeah, I have to say that I don't track telecom very closely, and I don't have any of these stocks, but I will give you a small tidbit. I was once talking to a friend of mine who's a competitions lawyer, does monopolies, and I said, I don't see why Jio does not acquire Vodafone when they're making so much investment in telecom and make a foray. Vodafone still has a very large market share, and Jio should acquire them because it does not hit Antitrust or Monopolies Act. Why don't they do that? And he said, look, their service is so bad and they have so much debt on their books that eventually they will not be able to offer what they're offering, and their clients will leave on their own. So most customers will switch to other providers. That's why they're not acquiring them. And personally, I think Vodafone Idea is anyone who's buying this. I have really no idea why they're buying this. There is no reason why a government would want 3 players in telecom sector, as some people have said. But anyways, not right for me to talk about it. I don't track telecom. I don't understand the sector very well.
So that's the view coming in on telecom. Not very sure at least why some of the people are buying. That's the view coming in. But in the meantime, we're also watching out for some of the other quality names which have moved up today. VIP Industries, for instance, is up 4.5%. Remember, overnight we were reading the news flow that Mr. Vijay Keria, marquee investor, has picked up stake in that one. KC International is up 4%. HPCL, ONGC, some of these stocks have been actually doing well. What's the view, Rajat, as far as these oil marketing companies and the entire energy basket is concerned? ONGC, GAIL, HPCL, they've all shot up massively. Do you expect a further re-rating there?
Yeah, no, I think ONGC did correct recently because of oil prices falling. For oil marketing companies, that's great news if oil prices fall. So I think, yeah, that's those are companies which you can continue to hold. ONGC, actually, if you have it in your portfolio, it's a good time to sell some of this because again, this is one stock which has been one of my favorites. I've been recommending it on your show since about 126, 128 levels. I had a long chat about this with Nikunj as well once. And my reason for buying this was a very high dividend yield. It still has a high dividend yield, but the way it's run up, ONGC is a stock with, remains range bound. So whether it's ONGC, so oil exploration companies, ONGC, in Chennai Petro, and all these companies, right now, not the best time to get into. If you had to, oil marketing like HPCL, BPCL, even GAIL, these are companies which you can consider buying into because, where oil prices are, they will keep posting good results for the next few quarters.
Right, okay, that's the take coming in on some of the energy themes right now. Kunal, we've been monitoring the charts of ONGC quite closely, right? Besides the aberration that I think took place a fortnight or so back, it clearly seems to be coming back quite strong.
Yeah, it's coming back quite strongly. The stock has respected its 200-day moving average. So, when stocks go into a strong uptrending mode, and then from there is a mean reversion phase where these stocks correct, indicators cool off, come back towards their individual means. That's a very good sign if these stocks hold on to their previous indicator support zones. And, for example, ONGC, even in the last leg, in the month of June, for example, just around the election corrections, the stock fell from, I think, 295 approximately towards 245 to 40 mark, coincided, the low coincided almost exactly to its 200 moving average. And from there, a new rally started off, of course, on a very slow gradual note for the stock, where it moved from 240, 45 levels to almost 340, 45 mark. Now, that's a very significant kind of a jump for a stock like ONGC, which has traditionally been a very low to, low to just about moderate beta kind of a stock. Now, even at current levels, when we look at the recent charts from 340.45, the stock had come back towards 280.85 mark, which means a decent correction of almost 12-15% for the stock. And now at this 280.85 levels, the stock has formed a double bottom, still holding on to the 200 moving average, indicators rising. The PSU stocks collectively as a basket are looking into a more of a short covering mode. So I think all of that starts to look attractive, and the risk reward at current levels is what should probably excite a short term trader. So my sense is that from current levels of 290.95, ONGC could be bought into with a potential target of 340.45 over the next 3 to 6 months.
Okay, so another 40-50 bucks up move possible on ONGC. That's what Kunal has to say on the matter. But also taking stock of what's happening in some of the other names as well, because we are seeing a lot of traction in a lot of these, names like a Suzlon, a First Source, a Zomato, Tata Power. All of these names are trading on heavy amount of volumes right now. In fact, tomorrow we'll also be watching out for the result coming in from that GOM meeting for GST, because perhaps a lot of important decisions like some changes in the tax slabs as well as on real estate might be on the table. If we can, we should probably go across to my colleague Sumit to get more details on the story. Sumit, tell us what exactly is on the agenda then.
Well, the crucial group of ministers meet will start in Goa today. Well, two-day meeting will deliberate on many issues, including GST rate rationalization on around 100 items. But today is GOM meeting on real estate. The important points that they discuss is GST levied on properties that can be part of discussions, definition of affordable housing for metro cities, discussions on GST on property purchase in group housing or commercial schemes, or industrial plot leasing on long-term basis. This is part of the GOM meeting that will happen on real estate today. But apart from that, other agendas are also there. 100 items till tomorrow will be discussed. So rate on that can be rationalized. Rationalization can be discussed. Remember, on September 9, GST Council had met in Delhi today, and important points were discussed. But these two days today and tomorrow are crucial as far as GST rates are concerned.
Right, okay, that's that on the real estate meet, or rather the group of ministers meet, which is going to happen on real estate and what we're picking up from that. But other than that, we're closing in, pretty much from where we actually started off, a lot more somber in trade, not quite the 26K mark for sure. But let me hand it over to Ashesha for the closing trades. Ashesha?
Well, absolutely. Yet another day of record highs for the Indian markets. We did cool off a tad bit from the highs that we saw in the last hour or so. But Nifty closing absolutely flat. 25,950 is where the Nifty is at. Remember, as far as banks and financials are concerned, we saw that outperformance come in over the last few days. Today, of course, it was in the red. Nifty Bank losing about 120 odd points. 53,980 is where Nifty Bank is closing. As far as the top gainers on the Nifty 50 index are concerned, we had Tata Steel, the top gainer, gaining about 2.5 to 3 odd %. We had Hindalco and Power Grid, which were also gaining in trade today. On the losing side, though, we had SBI Life, HUL and Grasim, which were some of the top losers on the index. Let's talk about metals in particular, because Nifty Metal Index was the biggest sectoral gainer today. Nifty Metal ending nearly 2.5% higher in trade on the back of positive news flow from China, where the Chinese central bank has gone ahead and announced some measures to boost the economy. We had Hindalco, which was up 4%, Tata Steel up 4.5%, NMDC and Nalco were also gaining nearly 3 to 6 odd % in trade today. On the losing side, we had FMCG index, which was under pressure, the biggest sectoral loser today. Nifty FMCG index was down nearly 0.5%. We had HUL, which was down 2.5%. Nestle and Varun Beverages were also some of the laggards in trade today. PSU Banking Index, the shining star of yesterday's trading session, reversed some of those gains of yesterday. Today, of course, Nifty PSU Banking Index was under pressure. In particular, Bank of Maharashtra, remember that stock shot up nearly 8% yesterday, but we saw some bit of gains in today's trading session. Bank of Maharashtra down 2.5%, and we had SBI, which was also under pressure today. A couple of newsmakers then. Power exchanges and power stocks were in focus. IEX down nearly 11% in trade. Tata Power and Power Grid were also in focus on the back of an economic ET Now exclusive story. All of these Tata Power and power stocks were in focus. Apart from that, from the pharma pack, we had AstraZeneca. The stock was up 12% after it received an approval for a cancer drug for distribution and sale in India. This stock up, in fact, 14.5% as we speak. Punjab National Bank down 3% on the back of QIP news, where the company is looking to raise about 5,000 crores. We had Paytm and First Source Solutions, of course, on the back of that acquisition that came in. Paytm on the back of a brokerage report up 4.5%, where MK upgraded the stock to add. First Source on the back of an acquisition up 6%. We had Ipca Laboratories, which on the back of a Nomura report was up nearly 3.5%. But yes, we did hit that record high in today's trading session. We did cool off a tad bit, but despite that, not a bad start to the Indian market. Nifty ending flat, nearly 11 points higher. But with that, it's a wrap on this edition of the show. Stay tuned to ET Now.
If you like this video, then like, share and subscribe to ET Now.